Good morning, everyone. Today is Saturday, August 15th, and today is the Roddy Update, where we cover all of our options trades, how we did for the week, how much money we made or how much money we lost, and also any other plays, including some high yield dividend ETFs, how much they paid us, and if we met our weekly goal. We are live on YouTube, 2 channels, Retire on Dividends, Retire on Options, and also live on X. So the majority of the people will be on the Retire on Dividends YouTube channel if you want to be part of the chat. If not, I'll see your comment. So comment away if you have any questions as we go live. All right. So before we even begin, we got to give some props to the first one here, Double D. Good morning. Good morning. You are the winner. SB number 2. SB gave 2 good mornings. There we go. Hoop Scoop. Good to see you. Alan, good morning. Good morning. He's always awake, so that's good. Kevin, good morning. Wooly Bully, good morning. And good morning to all watching after the fact. So anyway, let's look at Bitcoin. Let's see how Bitcoin did for the week. Not really fantastic. It started out 64,000, dropped to 62. We could see right here in the middle, strategy sells 1,690 Bitcoin. Okay, what else is new, right? Well, let's look at the 24-hour. Not as bad, looking like it's kind of moving up. But again, we're in this range and we're not really doing much. So it is what it is. How about stocks for the week? If I look at the SPY over the 5-day, the SPY went up 0.4%. Not bad, bro. Let's look at the Qs. The Qs went up 1.11%. Not bad, bro. And let's look at IWM. IWM up 1.17%. Winner, winner, chicken freaking dinner. As we prep for next week, we're looking at some earnings calls. Who do we got? Anyone important? Home Depot. I'm not sure if you can see. Maybe I don't know if I like zooming in. All right, Home Depot on the Tuesday, Walmart on the Thursday, Lowe's, Target on Wednesday. So maybe we can get some earnings plays in, maybe not, but I don't think anything's going to really move the market. We got Alibaba Thursday too. That thing's probably got some volatility. Good morning, 5-0. Good morning, Ambassador. Good morning, Wolf. NVIDIA. What about NVIDIA? Good morning, Parabolic. What's going on? All right, we're just about to get started. Here's the spreadsheet. A lot going on here. This is the watch list. It doesn't really mean anything. I don't even know why ELF is on here. I kind of retired ELF, but I'm really index focused. So here's obviously the indexes through ETF, and then I go down here, and then it's the indexes through the 1256 contracts. So, I want to kind of move here when I can. Obviously, certain plays, I'm going to have to use the ETFs. But if I can use indexes, to do some spreads later down the road, I will do so. Because, again, there's preferential tax treatment when you do trade, these that are almost unaffordable versus these. So all good, all good. All right, so let's first talk about a SOFI. All right, so for SOFI, we're doing a Roddy, right? For those of you who don't know what the Roddy is, it starts with a 3-legged monster. Oh, by the way, I didn't even ask anyone to confirm the audio, but I'm assuming you can hear me. Good morning, Susie. What's up? What's up? But yeah, please, for those of you that are live, let me know if audio is all good. All right, so SOFI, again, that's a Roddy. It's a buy call. It's a sell put, and then it's a buy put. We know about the buy call sell put. That's a synthetic combo. That's a delta 1. That's a 1 for, it's basically the same exposure as the underlying. But, if you leave it at that, don't forget, buy call sell put alone, you need the full, collateral for that underlying. So, you're not really saving any money. But then we add the buy put, which gives a little spread in between. And, that spread in between, now that's your collateral. That's your downside risk, which, that's better, right? It's better. It's not the best sometimes. It all depends on what the underlying does. So we'll see. We'll see. All right. But anyway, we have SOFI exposure through Roddies. And in the end, the point of it is so we can sell calls and make some income. In total, we are holding 5 contracts, 5 leaps, which is what matters, at a 2020 cost basis. You can see SOFI is currently priced at 18.29. What did I do this week for SOFI? Well, I had 2 contracts expiring next week, 8/21. So since I was we were just a loner, and this 8/21 here was basically pennies on the dollar to close, I rolled it to not next week, to the furthest expiration date that does not have a trade, which is September 11th, of course. And the strike I chose is still 21, the first strike price above my cost basis. Since SoFi is at 1842, it's paying a little more premium than what we're used to in the past. Not much though. You can see I got $18. So yeah, we just rolled one. We got $18 and we moved on. Next week, we have the 8/21 expiration. All we'll do is we'll roll it again. It's pretty simple. We kind of separated the SOFIs out. We can't really trade weekly until, SOFI recovers closer to our cost basis, because SOFI premium is not really, it's not too sexy, that premium. So we gotta do what we can. We gotta go a little further out, 28 DTE, 21 DTE, maybe even further. It doesn't matter. We just gotta make money and make it work. So again, this is a long-term play. My synthetic, in case you didn't see, it does expire June of 2028. So we got time. It's on our side. Yes, it is. All right. Anyway, $18 with a risk of 5,634. That is an annualized yield of 16%. Awful. I know, but it is, hey, whatever. We got, like I said, we got a lot of time. SoFi's doing its thing. We're happy it's recovering. We're happy it's moving upwards somewhat, and we're getting there. I'm not going to really cover what the holdings value is because it doesn't matter at this point. So let's move on to NVIDIA. Now, it's not really NVIDIA, it's NVDL, because it's more of a degen play. NVIDIA is a little unaffordable. So what do? We bought leaps. We bought, essentially, it was a poor man's covered call on NVDL. Now, problem is, again, NVDL did a split, as you know, 1 for 3 or 3 for 1. So for every one share that you owned, or well, say contract, you got 3. So anyway, I have 9 contracts with a cost basis of, we're showing 29, right? So that's fine, whatever. So I'm selling calls on 9 freaking contracts. So in order to make it more reasonable, again, since I don't have time to be playing with this many contracts, I kind of moved them into groups. So you can see I had 3 expiring yesterday on August 14th. The strike prices were 34, 35, and 36. NVDL was at 36, 71, up or down, whatever, around there. So what I did is I rolled them up, essentially like $1 each, right? So now you can see down here, I rolled it out in date to September 4th, up in price $1 each to 35, 36, and 37. Now, since I rolled them up and all of these essentially were in the money, it's gonna, the credit you're getting on the roll is not going to be as much, because again, you're paying a pretty penny to do the buy to close on these. However, the sell to open down here, the credit was greater than the buy to close debit here. So you still got something. What did I get? I got 235 on one, I got 100 on the other, and a 95 on the other. So, I mean, again, that's pretty damn good money. NVDL, again, very liquid options chain, very volatile, a really good one to trade, no doubt. I'm having fun with it. I don't think I played this one right from the start, but I'm learning on this one. I don't want to, when this is over, because again, my thing expires pretty soon in December, and when it's over, I don't really want it to end. So I may continue. I'll have to think about it, because this one, It's very expensive, but I may, and people always say don't go long on, double leverage, triple leverage funds because they decay. Okay, that's fine, whatever. But I may go longer, right? I may go out a year to see like how much price, how much value, how much I'm saving on the leap, and how does that, fare against the battle of decay in the long run? I don't know. Something to think about, but I need a sip of coffee. Oh, yeah. All right, before we get into the numbers, let's see what's going on in the chat. See if anyone's got questions or they're just yapping away. Audio is good. Well, that's a good thing. Add MTGN to the index list. Is that a freaking 1256 MTGN? Is it? All right, where are we at here? Go here. Let's see, MTGN. It has to be is it a 1256? Let's see what it says. It doesn't even work. Doesn't exist. MTGN. Doesn't work. It doesn't exist. All right, what else we got here? Morning, Jake. What's going on? And is that what is? Yeah, I know Tap Alpha had a thing. It's 1256 from CBOE. So what's the tick? Is that the tick? Why is it not coming up? MTGN. Let's see if the price works. All right, nothing's working. All right, well, maybe it'll show up at some point, but I added it and it's there for reference for next time. All right, so NVDL, how much did we make? We made here 230, like we said, 235, 95, and 100. That's about $430. And these suckers, we rolled them, right? These are rolling orders, so we can move on. What we do is, I just hide them, I move on, and they're off the spreadsheet. So now I scroll down and I check, okay, how much did I make? I made 430. How much is at risk? Well, the risk is the expense of all of those buy calls you saw in the first tab, which is a lot of freaking money, $8,597. Now, how much did I yield based on that total, capital? 260. That's worth saying if you annualize that sucker to 60%. But we're on a time crunch. We got to make this money and then some. So if I scroll down here, I do have the calc. I made $3,359 in premiums so far. That's an average of $258.38. We have 17 weeks left. Future income is estimated to be about $4,392. So if you add what I made plus the future income, we're looking at $7,751. That does not even cover the leap. But honestly, that is okay because we're going to get money. We're going to get money back on the leap, right? Now, how much? Let's see. Well, let's add something here. We'll do leap value. True. How much should we give of the leap value? Because extrinsic is going to be removed. Let's say at 75%, because we don't want to be like too greedy, right? So we'll do equals, and we do have the leap value right here. The leap is worth $9,832.50. So if we take that number and we multiply it by 75%, again, this is assuming we don't have to pay any debits on our covered call on the way out. So this is like, a perfect scenario, which it probably won't happen. We're looking at another $7,374. So again, that is not more than the leap cost, but our estimated profit we'll add the estimated total income from the options, and then we will add the how much we're going to make on the leap. Didn't work. Hold on. We'll just add it at the end. 6,520. Again, maybe not. Maybe we'll do leap value at 50%. Maybe we'll be again, I don't know what to expect. And I'm not going to be greedy. Again, this one is a little extrinsic, is going to burn out pretty quick, but even 4,070, on top, right? This is on top of the leap cost. That's a respectable return, right? If you take that, you divide it by this, right? You have to do a negative though. Make it a negative, then make it a percent, and that'll be your return, right? 47%. That's a return over how long is the trade? It really started at 211 days. So, again, that's pretty damn good. Considering, again, I may make more than that. I don't know, but that's kind of how it's working. But we'll see how it goes. All right, ladies and gentlemen, boys and girls, children of all ages, it's time. It's time. It's juicy time. Boom, boom, boom. All right. Anyway, as you know, Juicy, it's its own little monster. It's its own little play. It's very special. It's its own. It's a baby. It's a baby. It's new. It is new. It is awesome so far. And let's talk about it. All right. I have a Juicy on IWM. What the heck is a Juicy? Why are you coming up with these stupid names? Well, it starts with a long call, a leap, as they say. You buy a call. I bought a call on May 29th. It expires on June 18th, 2027. And it was in the money. In the money at the time, 20% in the money, 0.85 delta. At the time, IWM was at 289. Currently, it's at 305. So it's headed upwards and onwards. So that's good. That's a good thing. Even though what we're doing with the Juicy is in the money covered calls. So let's look at how this past week progressed. Now, I'm going to show you, I'm going to use this. Again, some of you may be familiar with this screenshot, but I'm going to try to use it. I know it may look like, and you guys got to let me know. Does this just look like chaos? Does it make sense? Is it, what do you think? So here, what am I tracking? Okay, here's the premium value, extrinsic wise, of the leap, just for informational. And then more importantly, here's the extrinsic premium we collected on the covered call at the beginning of the trade, which was August 4th. And what we do is we track it daily. All right, so we bought it August 4th. Here's the close of August 4th, close of August 5th, and so on. So at the close of the first day of the trade, you can see IWM, it went up 0.91%, and we already earned 10% of that extrinsic. All right. The next day, IWM went down, right? 0.64%, and we still earned. We earned about 12%. This is total. This is just in total. So it was additional 2%. The next day, IWM went down again, 0.5%. We earned about 17%. And then here, big pop up. It went up 1.11%. We had a big earnings of 75%. I did not close it at that point. I left it alone. And then we waited until the Monday. Monday, it closed at 299. IWM went down 0.5%. We earned about 67%. And then IWM went up 0.34% on the 11th, earning about 73% of the extrinsic. Again, we want to be at about 80%. All right. So, let's keep going. We got on the 12th up 0.57%. We're earning about 76%. We're still not there. All right. But if we look on the 13th, which was Wednesday, Thursday. Sorry. We went up 0.24%. We were at 95% earnings of the extrinsic. I'm going to, at that point, it's like, all right, bro, it's time. Why is it time to close it? Well, if I let it go after hours with almost no extrinsic left and a delta of almost a 1, I have a very, very high percent chance of getting assigned. And of course, yes, if I get assigned, it's not the end of the world. It just creates a little more work, but it's okay. However, if I can avoid assignment, I will do so. And I did. I avoided assignment. I closed it early, and I paid 7 cents of extrinsic. So you can see here, I made 170 up front on the extrinsic, and I had to pay out 7 cents, which again, that's all we're focused on, making money on the extrinsic. All right. And, again, I have this thing here because we always compare. We compare it to the underlying, to be fair, right? Because in the end, yeah, yes, we're making money. If you look here, since day one, we have not lost money. All right. This has not ever been a losing trade, standalone. But if you compare it to the underlying, we have lost 3 out of 11 times. That's still not a bad track record. All right. All right. It fits you because you are chaos. You are right, actually. Juicy time. That's right. Juicy. Still doing very profitable, juicy trades on IBIT and IWM. Good to hear, Hoop Scoop. All right. So let's look at IWM for the week. Again, this is the trade. This is not for the week. This is just when we open the trade, when we close the trade. Again, we opened the trade. IWM was at 298. We closed the trade. It was at 303. So IWM itself, if you just held IWM, you would have made 1.49%. Can't beat that. That's pretty damn good for a week. Very uncommon, of course, for the index to move that much, but it is what it is. So how much were we able to capture, though, on the juicy? Obviously not that, because remember, we're selling in the money covered calls. So, we have protection on the downside. So if we have protection on the downside, yeah, we're going to be capped on the upside, duh. But the important part is we still went up. Juicy started at 7,139 value. The closed at 7,192. We still went up 0.74%. That's about half. So we captured about half. You could see, yeah, we lagged the underlying. We lost, and we lost last week. But, IWM, it's running, man. It be running. But at some point, it not be running. I mean, you can see the 4 weeks prior. IWM went down 4 weeks in a row. Juicy went up 4 weeks in a row. Juicy goes up every freaking week. All right. And that's all I can ask. I'm not looking to beat the underlying. That is not my goal. My goal is to protect the downside. My goal is to produce an income no matter what happens. My goal is to capture some upside if there is upside. All right. So for this week, you can see we made about $163. That was the 170 minus the 7 cents we saw times 100. And that ends up being a yield of about 180% on an annualized basis. So again, I'm trying to show this. This is probably the easiest way for you guys to see, like, is this worth your damn time or not? Maybe it is, maybe it isn't. And also, one of the questions I got in the Discord, someone asked me, tracking wise, do you think you can manage like 10 of these or so, like while I'm still working? And the answer is hail to the no. I'm probably just going to do one, to be honest. One being index related. So it's either going to be IWM or the Qs. I'm not saying the SPY's out, but probably IWM. It's been treating me well. It's a great trade. It doesn't produce enough income for me to live off of. Obviously, 163 a week. It's pretty damn good, but that ain't paying the bills. Maybe the Qs alone would pay the bills, but you would need a lot. You would need a lot of money to shell out to buy a leap on the Qs. So for now, I'm just sticking with my little IWM. And of course, yes, I create more work because the spreadsheet work that I do, but that's for me and for you to hopefully help understand what are you doing? Because from the outside looking in, when you sell an in the money covered call, it looks like you lose every week, right? Of course, especially if the underlying goes up, in your head, you lost. It's a losing trade. But in reality, no, you're not losing. Like All you're doing is protecting your ass in case the market goes down. All right. All right. So anyway, that's how that trade ended up. Now let me gray out this old trade. Let's talk about the new trade, okay? Because remember, when we closed out the old at the same exact time, it was a rolling order. I rolled it into a new trade. Now, I had an obstacle this week. I was stuck. I was stuck at work and meetings all week, and I screwed up my juicy. I will admit, I screwed up my juicy. So let's see. You know, good thing I only had one, because if I would have screwed up, who knows? I don't know. But I didn't have time at all this week. I thought I was going to wait till Friday, but I couldn't because it probably would have got assigned anyway. But let's see what I did. But yeah, I literally had no time at all to trade anything this week. But so I had to rush it. So I did a rolling order. Now, here's the stats, the as at leap stats. You can see look at the freaking delta, 0.89. It was 0.87. The delta's going up on the leap. This is fantastic, right? This is good. However, when I was doing the in the money covered call, I always like to do a net delta between the two, because remember, the covered call is a negative. So if I'm looking at a negative and I want to stay around 0.1, I would look around 0.79, right? Point or less. Now, I did a delta of 0.71. That is too low. Because I remember there was a 0.75. And in my head, I'm like, all right, that's a little close because our delta is usually around 0.85. But I chose a 0.71 for that reason, not realizing the leap delta was, in fact, a 0.89. Again, because I was rushing and I just wanted to get it through within, our quick little break that we had. And I screwed up. But it may work out in the end. We don't know. So anyway, what is my net delta? Let's look. 0.18, way too high. Again, I want it around 0.1, around typically plus or minus a few points. 0.18, that's a little high. However, if IWM actually goes up this week, we're going to capture more of the upside. Remember, 1 for 1, we're capturing 18 cents per dollar. But on the flip side, we're going to go down a little more. If IWM goes down, we're going to go down a little more. So what does that mean? That means my intrinsic protection number is ew. We are only protected up to 299.58, which at the time of the trade was a 1.27% downside protection. That is not enough. That is not enough in my eyes. Why? Well, the average change week over week since January 1st, 21, IWM moves on average, again, this is plus or minus 2.3%. That's a lot, right? I know some swings, like you could see one week, that's unusual, 7% way back when. But, ideally, yeah, we just want to protect ourselves for that ideal movement. And 1.27% is not doing that. Even including our extrinsic sucks, because our extrinsic protection is only at 1.77. Okay. Now, so what are we going to do? Nothing. We're really not going to do nothing. We're just going to see how it plays out. So this is going to be a good learning experience. So ideally, yes, I would have chosen the next one up, which was the 0.75 delta. After that, the deltas were too high. Honestly, I was surprised on the delta swings. On just one trade up, the delta jumps like so high. But whatever, it's all good. The net delta is high, and our extrinsic was low. Whatever. Our protection's low, our intrinsic's low. But if IWM continues to go up, we are going to be okay. In fact, if you look at the new burn tab, since the trade, IWM has gone up over 0.5%. Again, I'm not taking that with anything because it's over like a day and a half. Anything can happen. And in fact, look at this. I don't even trust this number. Again, I plug in these numbers based on what I see in the after hours, the trade value, and it says I earned about 50%. I mean, yeah, okay. But we'll see, man. If Monday comes, Tuesday comes, we're earning about 75%, 80%, 90%. Hey, we can close it early again. But we shall see. All right. Anyway, so let's go down here to the bottom. This is the fun part. This is where we always have fun. All right. All right. SB says you can. I have 9 of them. Yeah, SB is doing this on 9 different underlyings, but he is a freaking machine. I literally could not do, like, at least this week. And then I have a week coming up. I can't do any. Zero trades. So what I'm going to do, I'm going to roll everything out 2 weeks. That way I have nothing expiring that week. But we'll talk about that soon. That's coming up. Fun. Ooh, yeah. Yeah, it's fun. It is freaking fun. All right, fun time. Let's go. So remember the columns here. We have LEAP, synthetic intrinsic premium, LEAP, extrinsic premium. Again, unrealized, because we're not touching the LEAP. The LEAP does not close unless we close it ourselves, unless we exercise it, unless we, sell the close. Now we have the covered call. This expires every single week. So of course, yes, it's realized. So let's keep that in mind. Now, what is this green? The green is the intrinsic. We are at a realized, well, let's exclude this week's trade. We have paid out of pocket 1,286 in intrinsic premium on the short call. That's what we paid out. Granted, yes, we just got a credit for this week. So if we net that, we paid out 943. Okay. But, to the point of how much we paid out, remember, we technically, we made that on the LEAP. However, the LEAP is unrealized gain. Because remember, you saw IWM has gone up since we executed this trade. So there is an unrealized portion, an unrealized gain, simply based on the intrinsic value that we can cash out at any point in time, which should essentially directly offset any expenses that we're paying for the intrinsic on the short call, if that makes sense. So that's why the green is offset. All right. Makes sense, chico. All right. Anyway, and then there's the extrinsic. But let me see. We got a question here. Let's answer the question. How long does the trade? How long does the trade? Does the trade take? For me, it depends. Well, spreadsheet included. I don't know. At least 30 minutes and 15-minute break, wouldn't cover it. But again, you don't need all the spreadsheet crap that I'm doing. You could just really just do it on the app and be happy with it. You can just keep it simple, roll to the delta, and track it later. And that's what probably people do. But again, I have so many different, spreadsheets going, which it may be unnecessary. But again, obviously, I'm tracking it for different reasons. And again, not only myself, to show visually each week. That makes sense. Oh, good. I think I understood what you said. All right, now let's talk about extrinsic. Now, again, covered call extrinsic premium. You could see we're making decent money each week, and this is the goal. The goal is to make extrinsic premium. Now, the extrinsic premium on the LEAP, it's going to be a little up and down, but eventually it's going to burn out to zero at some point. So that, we don't care about that. We know that. One thing that's guaranteed is extrinsic will go to zero, as we get closer to the expiration date. But, just to show you, again, we made 136 this week, kind of low, to be honest, but still, if we annualize it, it's about 96%. So still not bad. And yeah, here's the blackout period. Oh, and then we got X date the next week. Yeah, that's a problem. Yeah. I don't know, actually. Does anyone know the ex-dividend date for IWM? IWM ETF. I'm pulling it up on another screen. Yeah, so I don't have, it's not out yet. Unless someone knows about it. So I'm thinking it's around here. But again, I'm not going to have anything expiring this week because I can't do any rolls that week. So now I have to make it on X date week. That's going to be a problem. All right, we got time though. Let's not worry about that right now. But for now, you can see we made 136. Now, so also I have this kind of blackout period. When should we close out the leap? I don't know, man. I'm hearing conflicting information. I'm hearing 21. I'm also hearing 60. So I don't know. I gotta see. So I haven't really tested it myself. But to be honest, I may just see this through. You know what I mean? I may look and track it myself and see what the actual extrinsic burn is, you know, up to the final days. Because why not? You know, sure, I'll lose on extrinsic, but at least I'll gain on knowledge from experience. You know, everyone says back test, back test. I don't do back tests, or I don't do, you know, people do all that crap. I do actual tests. I do, you know, my trades are my tests. There is no, you know, back test. This is the test. So so I may take it that direction. We'll see. All right, so here's the fun part I was talking about. So how much have we made in extrinsic premium so far? We made about 1,829, right? On average, let's see. Yeah, so yeah, I just want to make sure this average work. Yeah, it works. Okay. So yeah, this should be the average, 152 per week. That's how much we're averaging. So again, let's talk about if this trade is worth it. You guys decide yourself. We have 44 weeks left. The average extrinsic is 152. Future extrinsic, we're planning to make 6,700. Estimated total extrinsic income should be approximately 85.35. All right. The leap expense standalone is 7,297. That would create an ending profit of 1,238. That is a profit of 16.97%. This is extrinsic premium alone. This does not count, you know, the leap. Are we going to make money on the leap? Yes. Yes. As of now, yes. And yeah, we're going to make money on the leap regardless. Also, one thing to note, the IV, look at this, man, this freaking IV. How that, see what I mean, man? This market, the VIX, we'll get into the VIX in a second, but look at this. IWM's IV, it was at 20 just not that long ago. Now it's at freaking 16%. Are you freaking kidding me? This is why the premium is weak sauce, man. But you'll look, it's calculated to be about around the same return. But okay, so now what about our leap? Again, we're expecting to make back what we paid. What did we pay? Intrinsic wise, we paid $5,988. What does that mean? We should get this back if the underlying stays at the price or is above the price of when we bought the leap. And we are well, you know, we're on our way. So assuming that's the case, we will make an additional 5,988 on the leap. We can't count anything above it. Why can we not count anything above that? Because that appreciation is offset already from the covered call realized intrinsic expense week over week. That's already out of our pocket. So we can't count that. That's not a return. The only part of the intrinsic return is at the price of when we bought it. And if it stays above or at that price, we will get that money back. And we will count that to offset the expense of, you know, when we originally paid for it. Again, hopefully that makes sense. If you think I'm wrong, feel free to, you know, mention it in the comments below or in the comments after the video. All right, so if we make 5,988, our ending gains will be the 5,988 plus that 8,535. So that's a total gain, all said and done, of 14,523. Of course, yes, we have to net out the expense of the leap, 7,297. That is an ending profit. This is profit, cash money, baby, right? Cash money on top. 7,226 ending profit percent looks to be around 99%. Again, this trade is approximately 1 year out. So that is an annualized yield of 99%. So is the juicy worth it? Yes, yes, and yes. Yes again, and yes again. So let's see. Again, it's still early stages. We still have 44 weeks left. We'll see how it goes. We'll see how it does in a bear market. Right now, we're in a bullish type market. We're in a crappy market, to be honest, but it's overall on the upwards. And that's what you want your underlying to do. And that's why we choose the index. We want, over time, we want it to go up. All right. So, yeah, here's PDC. What's going on? He's actually awake. Finally. If you guys can get PDC to trade options, then you win. All right, that's the goal. All right, let's keep going here. So is that, well, actually, we're not done with Juicy. Let's talk about the holdings. So as mentioned, and I know I have this on full view, 200%. This is what we paid. Intrinsic, we paid $5,988. Extrinsic, we paid $1,309. All right. So again, I plan on getting this back. This is coming back to me. All right, bruh. That's why we choose the index. Index is going up over time. Hopefully. And then we'll get that back. So the real expense is here. All right. So just keep that in mind. Now, this was how much extrinsic the leap had at the beginning. Now it has a value of 894. So you can see in time, the extrinsic of this leap is going down. Why is it going down? Well, because time decay, and also actually the implied volatility is dropping. So the premium will drop, for that reason too, which who cares? Doesn't matter. I don't care. If this is 0 when I close it out, I don't care. I really don't. All right. Like I said, I want to see how it goes and go from there. And here's to my point earlier. Yeah, we actually have 7509 value of intrinsic. We paid 5988. So technically, we have a gain of 1521 per share, 1,521. But as you may recall, how much did we pay on the covered call out of pocket? Let me show you again. Where the hell is it? There it is. Again, I'm not including the 343 we just got this week. Without this week, we paid out 1,286. So if I go here, I'm showing an unrealized gain on the intrinsic, on the underlying 1,521. So we're looking good. I'm happy that this number is greater than that number. Again, it should be a 1-to-1 match. So, and maybe it is, because again, we saw, it did go up. So obviously that includes some of that upwards movement. All right. Makes sense. Yeah, good. We good? We have 307 days left to trade this juicy trade. All right. So that, again, I'm going to post this as a separate video and probably launch it on the Tuesday morning. And it's because it's its own monster. All right. And I think it's an awesome trade. It's my favorite by far. So far, this is my favorite trade. So if I could only do juice, well, I shouldn't only do juicies, but I don't know. It works. It just freaking works. Is it a pain in the ass? Does it work? Yeah, sure, whatever. But it works. So since it works, I'm probably always going to have a damn juicy going. On IWM, on the Qs, on the SPY, it doesn't matter. All right, anyway, since that concludes the juicy coverage, and I'm going to separate that on a video, I must mention this juicy coverage has not been financial advice. I am not a financial advisor. And this juicy coverage was for fun and entertainment. All right, let's move on. We're not done. Not with this video. This video goes on and on and on. On and on and on. All right, so the VIX. What do you want to know? Why are we doing the VIX? The freaking VIX. It's at 14 again. Remember what I said? I said when the VIX goes back to 14, I'll start it all over. And guess what? It's at 14. So I bought a call. I bought another call, and I bought another call. I have 3 leaps now on the VIX. The VIX current price, 14.25. I bought a leap at 14. Why 14? That's just my number, man. I don't know. That's the magic number. It worked the first time. Let's do it again. All right. All right. So what's the plan? What's the plan here? Again, we see what the VIX does. What does the VIX do? It trades. This is an old chart, and I'll update it for next time. But it trades typically above $14. even above the $20. So we are in such a low, fear environment. Again, when it's under 14, what does that mean? Here's what it means. Calm, low volatility, markets are stable, risk is perceived as low. And yes, this is a formula based on what I have down here. So that's what it means. When the VIX is at this, the market is confident. The market is calm. Volatility is low. But you know what happens? A tweet, a this, a that, an anything. And then the VIX does fly up. And guess what this will do? This will fly up in value. It'll be very unlikely that the VIX goes down much further than this, at least based on what I see, from historical data. But again, this is also a learning experience. I'm not too familiar with this. I've done one and it worked. Doesn't mean this one will work, but again, I'm trying it out again. It is a hedge on the market. It's a hedge on the market because if the market tanks, the VIX goes up, and the VIX goes up, the price of these three leaps go up in value. So I'll make money if bad things happen, if people are fearful. So you're making money on fear. Think about that. You're making bank, bro, if people get scared. So how is that not awesome? Now, anyway, so why haven't I sold calls? Well, because we're still at 14. So what I'm waiting for is a pop up to 16, to 17, maybe 18, and then I'll sell covered calls. But what price will I sell at? Well, it's got to be at least the strike price I chose plus the premium I paid per share. So since I didn't pay 8 even, last time I paid 8 even, I paid about 8.4. We'll just say 9, right? So we take 6. It's about a 23. We're looking at like a $23 covered call. So I will look to pay or sell weekly covered calls at $23 or higher. So to sell a covered call in the VIX at $23 at this very moment, you're probably not looking like a lot of money. But if the VIX goes up to 15, 16, 17, 18, yeah, you're going to make some money. So again, I don't care. I don't need to sell calls right now at this very moment. I am just establishing my VIX position for this time being. If Monday the VIX goes down to 14, even 13, I may add one more. Again, I'm thinking 5%-ish of the portfolio to be VIX is okay. And that should be enough. But we'll see. We'll see. Let's check out the comments before we continue. All right. Freaking VIX. Yep, it's a freaking VIX. Question, is the buy call separate from the leap? The buy call is the leap. All right. So all three of these are the leap. What makes them a leap? I don't know. Everyone has a different definition. We'll just call it a leap is a buy call that expires, at 6 months or later. Okay, 6 months or greater. All right. I need to buy another. You bought a VIX leap? Well, sold puts technically would be buying first. So don't buy GME and AMC. Of course, we always buy them. Diamond hands, baby. MOAS, mother of short squeezes. But yeah, no, you probably still hold them. But to be fair, I told them to buy it. All right, let's see. Not financial advice, but do you think I can manage my way out of VIX $17 put? Somewhat painless between now and then. So you sold a $17 put on the VIX. When? Wait, November expiration? I don't know. I'd have to see more details. Share that in the options channel if you can, and we'll talk about it. All right. So the summary is I did not make any money on the VIX this week. All right. So if I go down here, premium made 0. Capital. Actually, I have to fix this. Capital at risk. Here we go. I did add a third. So there you go. So we now have $2,515. at risk on the VIX. All right. Again, the VIX is at a freaking low. Is the VIX going to stay down here? There's no way. I'm sorry. There's no way. Something's going to happen. The market's going to sell off. The market's going to be fearful, right? This Iran crap, it's not over. At least from what I hear. I don't know. I don't watch the freaking news. You guys tell me. It's not over, right? All right. Anyway, that's the update on the VIX. Let's move on to the wheel strategy. Because we wheeling. What are we wheeling? TSLL still. Yeah, we're getting our asses kicked on TSLL, but it's fun. It's still fun. All right. Let's see. We had 3 puts expiring yesterday on August 14th. What were the strikes? 7, 8, and 9. 7, 8, and 9. What did TSLL close at? 876. 876 is greater than 7. Check. Worthless. All right. 876 is greater than 8. Check. Worthless. 876 is not greater than 9. It get assigned. We got assigned. So that one, it got assigned. All right. So we got assigned another 100 shares, this time at $9. All right. $9. I will take it. I will take it gladly. It will lower my cost basis and let me sell more calls on the TSLL suckers. Now, speaking of calls, I had a 7, a 750, and an 8. I was going to roll them up and out. To be honest, it wasn't as easy as I thought. So all I did, I just rolled them out. I kept the same strike. I said, you know what? Whatever. For now, I can't. Let's not play games, because TSLL could come back down, right? So knowing that, then these would be fine if it came back down. So I just rolled them at the money. All right. So these are all rolling orders. I will hide them, clear out the spreadsheet so it's easier to look at. So here's the rolling orders. How much did we make? Was it worth your time? Was it worth a damn? Premium per share. Where the heck? It's all the way over here. 35, 25, and 20. We made $80. Hey, better than nothing, right? So what does that mean? In total, we have 3 puts pending. 2 expire next week, $6 and $7. They look to be safe. And then we also have 1 expiring on 8/28. So again, we can continue to sell puts. Covered calls, we'll talk about in a second. But yeah, right now we only have those 3. All right, let me take a sip of coffee. Oh, yeah. All right, that coffee helped. All right, David Outdoors. Hello from Syracuse. What's that? TE is a good stock. Is it? Is it really? What do you mean you sell covered calls on these leaps? What do you mean? What do I mean? All right, let me hold on. I gotta get this stupid. I still don't know how to work on MacBook, but well, yeah, let me answer this quote. What do I mean? You sell covered calls. I sell covered calls in the leaps. If you buy a call, if you buy a leap, you can sell calls against that leap, against that exposure of the leap. Normally, when you think of selling covered calls, you own the underlying, right? You physically own the shares. So in that case, when you sell the call, yes, it's covered because you own the shares. But also, if you buy a call, you buy a leap, it's still covered, right? You're selling calls the same way, and it's covered because you have the right to own those shares, at whatever strike you chose. But you still have that exposure through a synthetic, essentially, through a buy call, through a leap, through whatever we call it. I don't know if that made sense, but let me know. All right, let's move down. Let's show my journey here. Remember, all right, so TSLL, we started this wheel. First assignment happened on January 30th of 26. All right, great. Not great, really, because we got signed at 18. But whatever, we kept going. And we kept getting assigned March, June, July. Here we are now, August. So we got all these. We went from 18 all the way down to $8. So we have how many shares? 1,500. the heck is crawling on me? 1,500 shares at an average cost basis of $11.80. You know what, bro? That is not bad because TSLL is at $8.76. I can sell calls at $12. No problem. I can. And I didn't even know that. I forgot I was thinking my cost basis was still 14, but my cost basis is 11.80. That's pretty damn good. And if you look, if I use my cheating cost basis, yes, this is cheating. If you use the premium that I made, which is 3,073, that would deduct 205 per share. And that would make my net cost basis per share, again, deducting premium, which is cheating, 975. But again, I'm not using that number because why? Well, because I use the premium. I am here to make premium, not give it away to make my cost basis look pretty. The premium is mine. It's all mine. All right. So you ain't getting it. So I'm using the 1180. That is the freaking cost basis. All right. Not this stupid 975. Take your 204. That's mine. That's mine. All right. Anyway, so that's my cost basis. That's what I'm going to sell calls on. $12. All right, bro. All right. All right. So what does that mean? Well, again, it means if TSLL goes up, great. If TSLL goes down, great. We'll make it work either way. All right, so we made $80 this week. Again, not fantastic money, but we're playing it safe. Plus, we didn't have time this week to do options, as I said. All right, so that's the TSLL wheel. We still have a BITX wheel. We still got one going on. I haven't been doing much on this. I had $11 put. It expired yesterday. BITX expired at $11.59, which is above the 11. So that expired worthless. I did not get assigned any more shares. I would have liked more shares, but I did not get assigned them. It's fine. Sold another put yesterday, $11. How much did I get? $40. Okay, great. Whatever. Again, we're sitting here. How many shares do we own? We own 100 shares at $12. But I'm not selling calls on. I'm only going to sell calls on 50% of the position because this is working as some of my Bitcoin exposure now. So I don't want to completely sell out of all of it. But yeah, I made $40 for the week, which will help in the end. High yield dividends. You guys know last week I made some changes. Who do I own? What high yield dividends do I own? Well, here it is. KGLD. What the hell is KGLD? It's a freaking gold fund. All right. I want some gold exposure. I got it. I got it through the curve funds. Why? Well, it's a lower yield, more stable. It kind of kicked the other one's butts. So I chose that one. BTCI, again, not ideal, but it's the best option that I found for now for the Bitcoin exposure, Bitcoin income. It has a 26% yield, which to me is too much. I want less yield and more upside. So, and when I find a better product, better Bitcoin product, let's just say it pays 10 to 15% around there, I will buy that one. But for now, it's BTCI. T-SPY, amazing, freaking amazing. Zero DTE product. I want to do zero DTEs, but I can't. You know, when I retire, maybe. But right now, T-SPY's doing it for me. I'll pay them the expense ratio. They're doing great. TSLL, yes, it's on here only because it does pay a dividend, but whatever. TDAC, again, same thing. Same idea as T-SPY. I don't trade zero DTEs on the SPY or the NASDAQ because I don't have the time. So I pay someone to do it. MLPI, this is just my energy exposure. Good offset to the overall market. When the market's down, MLPI usually is up and vice versa. KYLD, it's my DGen play. It's only 23% yield though. Again, think of like an ulti, but it pays a lesser yield, so it takes less risk. Kind of like that. But you know, look at the chart overall. If you don't think it's a good thing, just look at the chart. All right, that's all I did. Look at the chart. All right, HCow, how we doing? Yeah, I love freaking HCow. I don't have to explain why because moo. That's why. Moo. All right, how much did I make this week in high yield dividends? Embarrassing enough, $11. Wow, that's very interesting. All right, so drums, please. We have made $704 in options premium, 11 whopping dollars in high yield dividends. Capital at risk. Is this still? Oh, I didn't update the VIX. See, this spreadsheet's freaking useless here. Yeah, I gotta yeah, I'll do that here. I gotta add it to, there you go. And then you drag it down. There you go. Isn't that a beauty? All right. So when you look at it this way, the return was about 1.31% in a week, 68% annualized. Pretty good. But again, my weekly goal is going to change. Quick update, which I don't have time for now, but here's the update. I'm moving to, my brokerage is my bank. There is no more other bank. All right. The brokerage is the bank. It's where the money comes in. It's where the money goes out. It does everything now. All right. I'm still working on how I'm going to track it, how I'm going to make it part of this video. Maybe I will, maybe I won't. But either way, like I said, I'm doing one video a week now. That this is my YouTube life. All right. And however, whatever I deem necessary for that one video per week, it will work. But if people are interested on how I'm making the brokerage my bank, then let me know, and I will add that to this somewhere. So at the end, maybe. I don't know. I know this video is long enough. I'm sure we're already at an hour and we're not even done. All right, that's being said, let's get our asses moving here. All right, let me zoom out a little. How'd the Roddy do? So overall, we made 18 on SOFI, 430 on NVDL, 0 on the VIX, IWM 136, TSLL 80 bucks, BITX 40, various, which is high yield dividends, $11. I got a dollar. I got a dollar. I got a dollar. Hey, 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 hey. All right, so we made for the week ending 8/14, 715 bucks. So yeah. All right, so that's a good week. I think so. What do you think? All right, what about our balance? Did our balance go up? Did our balance go down? Let's see. Our balance went from 63.6 to 64.7, and it went up 1.74%. That's good. Again, you have to keep in mind bills are constantly coming out. I literally have all these other bills now coming out of this account. So like I said, how am I going to track that? I'm probably going to make that a column here, incoming and outgoing. I don't know, man. It's just going to create more work, but it's for the account balance. How the hell are you going to know, what's going on? But maybe it'll be a wash. Maybe the income coming in will offset all of the bills, and then it doesn't matter. It doesn't matter. All right. Anyway, cash holding 17,000, option spending 4,000. So cash, actual cash 13,900. Cash allocation of the account 21%. Margin I can use 12,000, which is about 19% of the total balance. Yield required to make $2,000 a month, which again, that's going to change because all the bills be coming out of this account. All the bills. What's all the bills? Not 2,000. Shit. A lot more than that. All right, so we'll get there. We'll talk about that. In fact, my electric bill was $500 last month. I thought I'd get relief this month. It's about $450. So we are insane right now. The bills are just evil. The buys tab, in case you missed it in last week, we're starting some earning plays. This is just for fun. This is not serious. But again, I only got one in. It was none for this week because again, I didn't have time, unfortunately. But yeah, that one is a loser. I still have to get back that loser, and we'll go from there. But you can see the earnings plays for the week. Maybe we'll play some of these suckers. I don't know, bro. You tell me, bro. But we'll check it out. All right, let's go to. Actually, I'm just going to leave this up and see if you guys have any questions, and I'm going to drink some damn coffee. Halftime employee working for the fam right there. Another energy ETF is XLE, believed from State Street, owns different underlying stocks, has 18% distribution. What does MLPI pay? 14. See, I do like the lower yield because again, I'm trying to. This is my forever account now. It's got to pay me income by staying capital flat. But let's do a comparison. So let's do XLE and let's do MLPI. And let's just look at all time, or no, max time. XLE price wise, kicking ass. Interesting. Like really, like whooping that ass. All right, let's look at total return. Okay, whooping that ass. What the heck? What in the tarnation? All right, let's pull it up. XLE State Street. Let's look at their holdings. All right, so yeah, Exxon, Chevron, and at the same time, let's pull up MLPI and their holdings. They have 32 holdings. They have 24. Here's their 32. Williams Companies, blah, blah, blah. Okay. All right. Wow. Interesting. XLE. And I assume they sell calls? Exchange fund. Right? Do they sell calls? Let's see. Yeah, pull it up. Let's read. It seeks to provide investment results, exposure, oil and gas. All right. Do I just gotta look at the freaking holdings? XLEI. Oh. No wonder. All right. So what's the yield on XLE? 2.54%. All right. All right. Let's look at XLEI versus MLPI. Still whooping that ass. Price return. Still whooping that ass. All right. How long? This goes back to January. I mean, is this new? XLEI. Yeah, SPDR, XLE, exchange fund. This fund is actively managed, blah, blah, blah. All right, so this one has a yield. What the hell is it? It's 19%. And it performs better than MLPI. That is interesting. All right. So let's go back to products, ETS, fixed income. No. ETFs. All right, whatever. But no, thanks, Wolf. That's a pretty good one. Let me check on the comments. Interested in your brokerage bank budget videos. Sold a put on TE. Yeah, thank you, Alan, for confirming that. MLPI's pipeline, XEL's oil companies. The holdings are any indication, so it could drop if oil drops. Which broker do you use? I use Schwab. But yeah, Thinkorswim is the options app through Schwab. Yes, they're doing income funds on some of the sector. All right, yeah, no, I'll have to keep that one in mind. Obviously, it's different. I think it's different underlying, so we'll have to make a note of that somewhere. What the hell is it? X? I mean, I hate this tick. XLEI. Ugh. Excel. What ticker do you own? Excel. Come on. What's that? What the heck is that? All right. So, yeah, outside of that, I don't really have nothing. You guys have anything? But let me just mention now, as always, this is not financial advice. I am not a financial advisor, and this video was for fun and entertainment. So hopefully you had fun. Hopefully you're entertained. If not, oh well. Right? We'll do better next time. So I'm gonna play some music while I drink my coffee and chit chat with you guys. And I'll choose. Maybe I'll play a few songs. But let me know if you have any questions in the comments. We're still live, so I'll pull them up, whether you're on X or YouTube. We can keep chatting because I want to finish my coffee. So, all right, here. Let's start with the Juicy song, courtesy of Double D, Dividend Degenerate, who, by the way, we got to get him 1,000 subs very soon.
Yeah. Sip that coffee. It was all a dream, but now we got Juicy on the team. Roddy Squad, let's ride. J-U-C-Y, it's juicy, it's juicy. Deep po man's cover call, it moves me. And loop in the money, Delta high like 85. Set them in the money calls, watch the premium fly. Juicy, juicy. Big Juicy, Russell 2000 IWM, it fits me. 7K instead of 29K, that's the cost. Poor man cover call every single day. Started with a dream, Word Up magazine in my hand. Now I'm trading Russell small caps, making premium grand. Bought that lead deep in the money, strike 230. IWM at 289, intrinsic looking pretty. Delta 85, it moves almost 1-to-1. Sell weekly calls above it, income rain when it's done. Don't care if it dips, don't care if it rips. Premium keep coming, watch the account flip. Time King show the way, deep poor man style. 7,300 versus 30 grand, that's how we smile. Black Rock, ETF, small caps in the game. We ride the range. J-U-C-Y, it's juicy. Juicy, baby. Deep poor man's cover call. And moves, let's go. Up in the money, Delta high like 85. Sell them in the money calls, watch the premium fly. Juicy, juicy. Big Juicy, Roddy portfolio looking super juicy. Coffee sip, screen flip, Thinkorswim on the grind. Update that spreadsheet, keep the numbers aligned. Intrinsic, extrinsic, break it down clean. Time decay on them short calls, that's the green machine. IWM do its own thing, sometimes like the cube. But with Juicy in the squad, we still collect the dues. Not financial advice, do your research, fam. But once you go deep, poor man, you never go back down. From baseball nights to late night charts, retire on the options, taking it to the charts. Juicy newest member, welcome to the Roddy crew. Big Juicy returns coming straight for you. It's thick, it's deep. Delta high, premium sweet. Not a share in sight, but we on the upside. Juicy got the whole squad feeling alright. J-U-C-Y, it's juicy, juicy. Deep poor man's cover call, it fits me. Deep short calls, income daily. Roddy forever, we eating gravy. Juicy, juicy. Big Juicy, beat options flowing, dividends sweet. From the Russell 2000 to your whole portfolio, meet Juicy. Now let that big go, yeah. Welcome to the family, Juicy. Yeah, retire on options, we out. Yeah. Oh, yeah.
Early mornings before the sunlight, house still sleeping. Screens already lit, one desk, one plan. Every click gotta mean something. Born in the garage, one outlet, one extension. Pressure taught discipline, not talking, just intention. No suit fed my confidence, no hand-me-down plays. Bills on the counter taught me risk has a face. They said trust the system, I trusted the work. Every loss paid tuition, every win left a scar. I heard a cricket in the quiet, steady chirp in the dark. Like patience beats panic when you're playing it smart. If I eat, that's on me. If I fall, same name. From the people for the people, no shame in the gang. This ain't Wall Street.
This Friday, hey.
Bang for the buck, move slow, move low. Stack that premium, protect my six. Upside open, but I hedge that risk. This ain't luck, I'm ready. Garage born mine with the market steady. I don't chase green candles, I monetize waiting. Data working daily while they guessing and praying. Risk defined entry, exit already mapped. Know what I lose before the order gets tapped. Premium stacking, structure over sensation. Volatility, paying rent with no conversation. I don't need direction, I trade behavior. Let emotion burn out, let the numbers stay paper. Fast money flashy, but it fades when it's pressed. I want repeatable wins with my downside dress. Not a lottery ticket, this a blueprint I trust. Level the field, get more bang for the buck. This ain't Wall Street, this Rowdy. Bang for the buck, move slow, move low key. Stack that premium, protect my six. Upside open, but I hedge that risk. This ain't luck, I'm ready. Garage born mine with the market steady. Raj, cricket, patience built in the minutes. Risk known, I don't trade what I don't own. Not for everyone, let's keep it exact. Pressure make diamonds, not internet caps. No handouts, no hero, no suit to impress. Just structure, discipline, time doing reps. Roddy the method, remember the name. From the people, for the people, but not everyone plays. Born in a garage. Born in a garage. Yeah, born in the garage, inspired by cricket. Built for the people, but not everyone gets it.
Meet Rod, more bang for the buck. Wall Street suits, your time is up. Meet Rowdy, more bang for the buck. Meet Rod, more bang for the buck. Wall Street suits, your time is up. Stack that premium, protect my six. Upside open, but I hedge that risk. Garage born plan, average Joe, taking a stand. Roddy's the method, RD is the man, RD is the man. Yeah, didn't wait on permission. I picked up the weight, phone in my hand, early hours, learning to take. Garage taught patience, no room for excuses. Every choice mattered cause the outcome it uses. I stopped handing the wheel, the voices I trusted. Took responsibility, that's when it functioned. If it worked, that was earned. If it failed, that was mine. Family in my vision, so I stayed on the grind. This wasn't about hustle or flexing the grind. It was structure and rules, I could run every time. Brody came from method with discipline attached. Built for the people who carry the weight. So meet Roddy, more bang for the buck. Wall Street suits, your time is up. Stack that premium, protect my six. Upside open, but I hedge that risk. Garage born playing, average Joe, taking a stand. All D is the method, all D is the man, all D is the man. I don't chase green candles, I monetize waiting. Data working daily while they guessing and praying. Premium stacking, structure over sensation. Volatility paying rent with no conversation. Wrist boxed and tight before the play even starts. Calm under pressure, John Wick with the plan. They argue direction, I structure the trade. Let volatility work while emotion gets played. Fast money flashy, but it fades when it's pressed. I want repeatable wins with my downside dress. Not a lottery ticket, this a blueprint I trust. Level the field,
Get more bang for the buck.
meet Robbie, more bang for the buck. Wall Street suits, if your time is up. Stack that premium, protect my six. Upside open, but I hedge that risk. Eyes born playing, average Joe, taking a stand. Roddy's the method, RD's the man, RD's the man, is the man. Family to your head. I don't need hype, I don't need a crowd. Just rules I respect when the pressure gets loud. This ain't for everyone, that's part of the design. Roddy rewards the ones who take responsibility every time. Roddy, Roddy the method. Roddy, the people, the people, Roddy. want it, carry the weight. Me. Ooh. Yeah. Good morning, friends. R to the O to the D. Retire on dividends, you know me. Cash flow mindset moving differently. Numbers don't lie, plans stay ready. If you want that life, say freedom with me. R to the O to the D. Retire on dividends, you know me. Built, not sold, yeah, intentionally. No hype talk, just clarity. If you want that life, say freedom with me. Mid-40s, married man, house stay loud. Raising up boys, turning boys into men. New puppy running, chaos around. Still clocking in, but he plotting the end. Giants fan scars, yeah, he wear that pain. Smiles through the losses like part of the game. Never throw shots, never talks that mess. Yeah, builds people up, less results address. Yeah, streams every day, never missing a beat. YouTube live X when the mic get heat. Not selling dreams, just showing the math. Wins and drawdowns, full on his path. Spreadsheet brain with a streetwise frame. Plays of discipline, never chasing fame. R to the O to the D. Retire on dividends, you know me. Cash flow mindset moving differently. Numbers don't lie, plans stay ready. If you want that life, say freedom with me. Yeah. Options on screen, risk handle precise. Structures built calm, every move got a price. Cover calls roll, protection in place. Time on his side, patience setting the pace. They say slow down, he say stay exact. Same calm tone when the market snap. Runs through mud, just to test that will. Same mindset when the chalk goes still. Sings on the post, crowd laugh, he grin. Go dig a hook, but the lesson still win. Movie quotes fly, wrestling frame. Serious work, but he keep it light, man. R to the O to the D. Retire on dividends, you know me. Cash flow mindset moving differently. Numbers don't lie, plans stay ready. If you want that life, say freedom with me. If you want that life, say freedom with me. This was for fun and entertainment purposes. I hope you have fun and will entertain. And if not, I'll do better next time. And if you made it this far, and you want to make sure everybody knows, you got to say the keyword. Freedom!
All right. Yes, that's what I was thinking, Jesse. They complement each other. I still want to look into them. So I may have to hold both, but we are at the end of the video, so it's keyword time. So if you made it this far in the video and you want to prove it, you gotta say the keyword. You have to say the baby. All right, keyword today. We'll just go from the song Freedom. Freedom. All right, so we played some songs today. Thank you all for hanging around. I appreciate it. Long ass video. I finished my coffee, about to go on a run. So whoever's live next, let me know. I'll join. But if not, we will talk soon. All right. Again, keyword freedom. All right. Anyway, I'm out of here. I'll see you guys in the Discord chat. Have a good one. Later. Me. I am me. I'm running. Let's all run. Bye. Later. Peace.